Welcome back for the week of August 25th through August 29th. Here we're going to talk about interest rates, inflation, and what to expect this week in the financial markets. Now, the big thing right now that's going on is interest rates, right? They're looking at interest rates, whether or not Fed Powell is going to reduce interest rates when he has his meeting on September 17th, when he speaks to all of us at around 2:30 p.m. There we will find out whether or not, rates will be lowered, rates will remain the same, or rates will be higher, right? Now, the two things that Fed Powell needs to look at are your inflation and your employment. Now, those are two different metrics. So, for example, if inflation rises and the cost of goods and everything continues to rise, guess what? Interest rates can hold steady or rise to cool the demand. Now, if unemployment numbers start to rise and you start losing jobs now, then Fed Powell might have to look at I may have to reduce the rates now because we're not having people in the market. People don't have paychecks. They're not really spending. They're not really getting loans. Rates. So I might have to lower the rates because now you want to reduce the interest rates to get people to go back out there and start borrowing and get people to go out there and start buying and stuff like that again. So there are two things. However, right now, at this very moment, it's called stagflation because we have both. We have a rise in interest rates and, a lowering of job growth and high unemployment numbers. So those two things give Fed Powell two different directions to go into. So where he's going to meet, we don't know. Now, with inflation, the reason why he raise or keep the rate steady, and the reason he's been keeping the rate steady so far, and people are complaining oh my God, I'm paying this much for that, I'm paying for this much for that, I'm doing, and even me, I'm trying to sell my house, and I'm I'm waiting for these interest rates to come down so I can sell my home, right? Nobody really wants to buy a home at 6.5% interest rate. So I'm waiting for the rates to come down, but I also understand the reason it's not, because if these companies are raising prices on services like rents and utilities and tuition and healthcare and insurance, right? If we lower the rates, they just borrow more money, they build more houses, then they can just keep raising rates higher and higher. So in order for Fed Powell to kind of keep that in check, he's not trying to get them to lower rents or lower anything, because we know once, first of all, for jobs, in order to get people to work, they're gonna have to raise the wages. So when you raise the wages, then people have more money, and guess what? They're gonna spend higher prices, right? So now to kind of slow all that down, we keep these rates high, then that would keep companies from borrowing money. They'll keep credit cards, and they'll keep all that, and they'll kind of slow down demand, not to kind of bring the prices down, but to kind of just slow the demand down some, and just kind of keep it from rising like this. He wants to, if it's going to rise, it's going to rise. Like they say, once the prices are where they're at, more than likely they're not going to come back down. But what you can do is slow the rise. So for example, instead of it rising 7% month for month or whatever, it'll rise maybe 3%, because their target core inflation number is 2.0. And right now for June, we were at 2.8. And then July was 2.9. And so now for August, it's not going down. It seems it's kind of creeping up. So to slow that, he would keep the rates, steady or high. Hope that makes sense. Now, but for employment, now our last BLS report showed that, we had high unemployment numbers, and it showed that we had slow job growth. Now that would usually indicate we will lower the interest rates. Fed Powell will lower interest rates, right? When we have those numbers. That looks pretty good as far as lowering them. But then, somebody fired the other person that gave those numbers and said, no, we're doing better than that. We're doing a lot better than that. Those numbers are fake. I'm going to put my own person there. And then next time you get the numbers, they'll be the real numbers because those numbers are fake. But for people who are waiting for the interest rates to come down, that was kind of what we wanted. I know for me, thinking selfishly, that was kind of what we wanted. Those numbers, look pretty good to lower those interest rates, right? So now this week will be but Fed Powell this week will look at these two things. On Thursday, we're going to have the job numbers, and it will show our weekly unemployment again. And that will kind of give us an indication on whether or not, we're going down, as far as job claims and stuff. If the job claims are going up higher, So it'll show like we had, June, July, we had all these other weeks. It'll show whether or not we're still like having a higher increase in unemployment, right? So that on Thursday would kind of give us a little indication of that. But then Friday we get like the PCE numbers. Now this is like a key inflation report that, Fed Powell will look at to see where we're at with inflation before he makes a decision on September 17th. The PCE, which is the Personal Consumption Expenditure Price Index. And those are the things that are non-negotiable for most Americans. Like people need a place to stay. They have to have the utilities. These are things that people cannot skimp on, right? So those numbers are like your true like consumer, spending and what inflation really is for the average American. So that's what, Fed Powell will look at that. And those numbers come out on Friday, August 29th. And like I said, those things include like, for example, housing, utilities, healthcare, transportation, tuition, childcare. Those are the things that PCE will include. And that would give Fed Powell a better look at where inflation is going. And those are one of the key metrics that he will look at when it comes to whether or not he will lower the rates on September 17th at 2:30 p.m. Now, in other news, you just have like other little things going on. You have Elon Musk, suing Apple and OpenAI, because it's like, look, Apple and stuff, they're using ChatGPT and everything. And he feel like they're kind of cutting him out, of like the Play Store because Apple's choosing to use like, ChatGPT, OpenAI. I really don't know. But, from what the lawsuit is, whatever, it's like, kind of like, I don't know, I don't want to give any opinion on it. And then Apple's, Apple's just trying to like keep up with like AI and everything that's going on because like for them, they pride themselves on like privacy, right? Apple's saying, look, we keep all your stuff private. And so I was like looking up like, well, if they pride themselves on like privacy and everything like that, if you're using ChatGPT, which scoops up all your information, so they can, better, train AIs, with the information that you're inputting and everything like that. But, they do have like an opt-in, opt-out. So just because Apple is using like AI, or whatever, you still, as a consumer, still have the right, to opt in or opt out. So, you have that lawsuit going on. We'll see. We also have Nvidia earnings coming up on Wednesday, August 27th. And that would also, because all this stuff right now it's like the race. All these companies right now are racing for AI to be the best, But so you have Nvidia, which is kind of like going to give us like a little indication. Because right now, AI stock, tech stock, rallying, child. They just going. But now when Nvidia dropped their little numbers on Wednesday after hours, whether or not, they made earnings, that's gonna like kind of give us an indication on whether or not this rally will continue or it just kind of like start going down, right? So everybody's looking at Nvidia right now. So I'm not sure if you do options or anything like that, but if you do, Nvidia's one to watch on Wednesday, August 27th, and then after 4 p.m. is when they'll be doing their earnings report. The market will be closed, so like if you're doing options, once you in, right? So we'll look forward to that. Another thing is Target, their CEO stepped down, got fired, whatever wording they want to use because their numbers have been declining and they're still trying to figure out like why. From different sources, they say because of competition from Walmart. Walmart, you can get things cheaper. From other sources, DEI, could have caused it. But I think they had, from one source I've read, they did have a meeting with their board to discuss like DEI, whether or not they want to like, change on that or whatever. And from what I read, it was like, no, we don't want to make any changes. We want to stick to what we say we were going to do. So that's where they're at now. So either Target is going to end up, continue being Target, or it's going to end up being Kmart. It's up to them, right? That has been a main topic, interest rates. Everybody wants they think the rates are too high. And to me, they are. But also, I know from experience that this is like the average interest rates. If you go back and look at interest rates in history, 6.5 is pretty average. I remember retiring from the military like 20 years ago, and, to buy a home, the average interest rate was like 6.5%. like almost where we're at right now. But you know, when 2008 came along, we had that financial crisis and we started seeing rates dropping, child, we were like, we kind of got used to that. And then with COVID, and then when the rates went down to like 1 point something, you know, because I even locked in like a 2.25 during like COVID, right? It was like now everybody's like, 2.2, 1.7, you know, 1.5, you know, almost zero. And then in 2008, so now people have, Americans, we have high expectations now. Like we're kind of spoiled. Like we really believe that interest rates are supposed to be very low. Well, not saying supposed to, because I really think that interest rates should not be as high as they are now. You know, when you get a home, it should be like you should not be able to buy a $200,000 home, and by the time you pay it off, you're paying back $1 million. That should not be the case. It should not be like you buy a home and you pay your mortgage payment, and then like maybe, you know, 10% of that mortgage payment is going towards your principal, and the other freaking 90% is going towards interest. Yes, total ripoff. I totally agree with that. So I'm not disputing that at all. What I'm saying is that as far as the rates are concerned, this has pretty much been average ripoff for American people. You know, 6.5%. I was looking back, like even like in the 1980s and stuff like that, people were paying like 13 and 17% for mortgage rates. When you look at the 1980s, the average is like 12.8%. 1990s is 7.9%. 2000, 6.2%. 2010, that's when we started, you know, right after the 2008 recession or whatever. That's when we finally started seeing like these rates like 4.0, 3.0, 2.5. That's when that happened. Where we're at right now is pretty much average. But I do understand, and I'm with you. I do believe the interest rates should, and I do want the interest rates to drop. I just wanted to give a little bit of history of like where we're at right now is not really like something abnormal. So that was it. I just want to spill that about the interest rates. We're a little spoiled. I am too. I want to sell my home. I want the rates to be lower, you know. But I also want people to have jobs, you know. I also want the rents to come down. I also want, you know, I want the rates to come down for mortgage rates to come down, you know. I also want healthcare prices to go down. You know, I want people, American people, to actually be able to live and survive. Anybody who works a 40-hour work week should at least have the basic food, shelter, and clothing. You know what I mean? Like, that just should be the basics. Nobody should have to get 2 and 3 jobs and still go without. So that's where I'm at right now. That's just my own little personal thing nobody asked me about, but I just thought I'd go ahead and throw it in there anyway. So that's where we're at right now. That's our market news for the week of August 25th through August 29th. Again, important dates to look at. Wednesday, when you have Nvidia earnings, they'll give you like a little indication of where the AI rally is going. On Thursday, you're going to have the unemployment numbers. And on Friday, you're going to have your PCE numbers. So stay tuned. I'll be back next week. And happy trading. Bye-bye.